Gold IRAs versus gold ETFs. A comparative analysis. Gold IRAs and gold ETFs serve different investment purposes. Both investments present different advantages and possible risks. To read the full article, see the link in the video description. A gold IRA, or individual retirement account, is a self-directed retirement account that enables you to invest in genuine gold and other precious metals. A gold IRA deals with physical gold, offers stable, long-term tax-deferred investment growth, and is subject to various IRA rules. It's a remarkable option for diversifying your retirement portfolio beyond traditional equities and mutual funds. Importantly, the physical gold in a gold IRA is stored in a secure and IRS-approved depository, giving you peace of mind about its security. On the flip side, gold ETFs, or exchange-traded funds, which track gold price movements without physical ownership, offer high liquidity and eliminate storage costs, but they involve greater counterparty risk and are subject to capital gains tax, which can reach 28% for long-term holdings. Also, expense ratios ranging from 0.25% to 1% can affect your returns. Critically, each investment avenue has its unique advantages. A gold IRA allows for tax-deferred growth and provides an effective hedge against inflation, given that gold prices typically rise when the cost of living increases. Conversely, gold ETFs are more cost-effective due to their lack of storage and insurance costs. Tax and cost implications. Maneuvering the domain of taxes and costs associated with gold IRA and gold ETF investments, it's clear that each avenue comes with its unique financial implications. Let's start with gold IRAs. One of the chief benefits of a gold IRA is tax-deferred growth, meaning you won't pay taxes on your investment until you make a withdrawal during retirement. However, not following the gold IRA withdrawal rules can lead to possible penalties and taxes if you withdraw before age 59 and 1/2 years. Additionally, the IRS requires that a qualified trustee or IRA custodian manage the gold IRA, and these services come with fees. However, certain gold IRA companies will offer a waiver or reduction in fees depending on the contract. I have provided details and links in the video description of the best gold IRA companies and their investment minimums. On the other hand, gold ETFs are considered securities, and consequently, they're subject to capital gains tax. The rate hinges on your income and how long you've held the investment, but it can reach up to 28% for long-term investments. Additionally, gold ETFs come with expense ratios, which are annual fees charged as a percentage of your investment, typically ranging from 0.25% to 1%. It's also worth noting that the cost of owning physical gold in a gold IRA includes storage and insurance fees, while gold ETFs, being paper assets, eliminate these costs. However, the convenience of ETFs comes at a price known as the bid-ask spread, the difference between the highest price a buyer is willing to pay for an asset and the lowest price a seller is willing to accept. Understanding these tax and cost implications can greatly influence your decision between investing in a gold IRA or gold ETFs. Making an informed choice can optimize your investment growth and minimize unnecessary costs. I just want to take a brief moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. And now, back to the video. Evaluating security and accessibility. Building on our discussion of investment strategies, let's shift our attention to the domains of security and accessibility. These are key considerations when deciding between a gold individual retirement account and gold exchange-traded funds. In terms of security, a gold IRA has an advantage as your gold is stored in a secure, IRS-approved depository. The downside? You're entrusting your assets to a third party, which can be unsettling for some. However, keep in mind that these depositories' reputations are built on decades of trust and are heavily guarded and insured, reducing the risk of theft. On the other hand, gold ETFs don't involve physical gold. Instead, they represent a share of gold, which is stored and secured by the fund manager. This eliminates the risk of physical theft, but exposes you to counterparty risk. Should the manager run into financial trouble, your investment could be at risk. Key considerations for investing. So, how do you choose which investment option is for you? First and foremost, consider the tax implications. With a gold IRA, your contributions can grow tax-free, and the tax isn't due until withdrawal. On the other hand, gold ETFs are classified as collectibles for tax purposes, with capital gains tax at a maximum rate of 28%. Gold ETFs have an expenditure ratio that can eat into your returns over time. Another significant consideration is your investment horizon. If you're eyeing a long-term investment in retirement savings, a gold IRA might be your best bet. But if you prefer a more liquid, short-term investment, consider a gold ETF. Lastly, don't discount the importance of diversification. While both gold IRAs and gold ETFs can add diversity to your portfolio, the former allows for a broader range of precious metals, tangible ownership, and eliminating counterparty risk inherent with paper gold products. Finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides gold IRA as well as private investment options for home storage. Decide based on your individual needs. See the links in the video description to access each company's free gold IRA investment guide. Investment minimums are also listed in the description. In summary, both gold IRAs and gold ETFs come with their own unique benefits and drawbacks. Your choice should hinge on your specific financial goals, tax situation, and risk tolerance. Always remember that diversification is key when investing. So whether you opt for a gold IRA for its tax advantages or a gold ETF for its liquidity, make sure it complements your broader investment strategy. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to attend a free gold investing webinar hosted by Augusta Precious Metals. Happy investing, and thank you for watching.